very simple but incredibly robust market structure has proved very attractive to smaller growing companies over the years, and increasingly to smaller growing companies from throughout the world. And if I look at AIM's growth and its success, AIM, as I said at the start, somewhat boastfully but truthfully, has become the world's most successful growth market. If you look at the recent statistics, some of the recent statistics, they clearly show AIM's incredible progress. Between 2002 to today, the market capitalisation of companies quoted on AIM rose from 15 billion euros to 75 billion euros. We've now got over 1,300 companies on the market. That's the second largest number by number of companies in Europe. And the number of international companies has more than doubled in the last year to over 200. We've already raised 7.5 billion euros in the first 9 months of this year, which is twice what it was in 2003, more than the whole of 2004. We continue to break records the whole time. Last year was a record in terms of numbers of companies. I think we had 355 new companies. This year we've already broken that record. We've already broken the record for money raised and the total value of shares traded. If you actually look at the total values of shares traded to the end of September this year, it was something like 45 billion euros. That's a doubling in liquidity in a year. Trading in September was 250% up on September of last year. So that begs the question. I could spend another 10 minutes giving you interesting statistics because I've got loads of them, as you can imagine, in the back of my head. But it begs the question, how have we managed to create such a market whilst others have struggled and actually failed in most cases? Now, I think the reasons are very simple. The first one, obviously, is the market structure. As I said at the start, we've got the right balance between a market which is suited to the needs of smaller growing companies in terms of its structure and the ability to access public equity at an early stage, the right balance between obligations and benefits. AIM, going on, is a very diversified market. At the height of the tech boom, it seemed that the more IT and technology companies the market had, the better it was, and the more dynamic it would be. And markets battled with each other to get those companies to come to market. And I know, I was working as an investment banker at the time, and the Neue market used to float business plans, not businesses. And it was a single sector. So that kind of market is bound to fail in the end, actually. So it's just a lesson from history. AIM was different from its rivals because we welcomed companies from all sectors. As long as those small, dynamic growth companies with real businesses and strong, ambitious management, knowing where they were going. We've got 33 sectors on AIM today, and that's one of the great strengths of the market, and it's been key to its success and longevity. So obviously we're not immune from market turbulence, but the fact we've got a very broad base of business sectors gives us a lot of defence. The balance is crucial. The next thing really was the fact that we've been able to attract institutional investors. When AIM started, it was all a retail market. Now, getting on for half the investors on the market are institutional investors. And that's because the risk-reward ratio of AIM is very attractive, because you're investing in companies at the steepest curve in terms of their growth. And we've worked very hard with companies over the last 10 years, institutions, to attract them to AIM. So AIM has truly become a mainstream asset class. The other thing is really the network of people which support AIM, the advisors and the nomads. We've got a whole network throughout the world of people that recommend AIM. And what we've got at the moment are very, very strong network effects. More and more institutions are focusing their investments on AIM. More and more companies are thinking AIM is the obvious place to go. And there's a huge network of advisors, etc., who are pushing the AIM market. The next thing which I think is interesting on AIM is the internationalisation. AIM's universal appeal is increasingly being understood by non-UK companies, because AIM is a unique market. It's created a unique access to capital, a unique market structure. And as other growth markets have faltered and failed quite abysmally, AIM's actually gained critical mass. And we don't just have companies from 1 or 2 countries. We've got companies from 19 countries on AIM. We actually had a Bangladeshi company the other day which I welcomed, which is a great ceremony because the whole family turned up. We had about 90 people in the exchange. It didn't cost us any money because it was Diwali, so normally we drink champagne to welcome companies, but it was during the Feast of Ramadan, so not the Feast of Ramadan, but when people don't eat during the day. We've also had companies from New Zealand and Malaysia in the recent past. But it doesn't surprise us that we've got great interest in AIM from a large number of European companies, actually. And their advisors are increasingly coming to us saying, can we become nomads? Last month we had our first German primary listing on AIM. That was a company called SQS. We also got a primary listing from an Italian company where they raised 10 million euros to actually finance their fuel cell technology. And the point here is that I think as Europe implements a single regulatory framework, national barriers are becoming less significant and companies have been given more choice. But the key point is companies are focusing on gaining access to the right type of capital and the right market structure rather than just focusing on the physical location of their stock exchange. And the European Venture Capital Association has called, as you know, I think, for a single growth market on a pan-European scale. And it's very clear why. There was a study done recently which we commissioned and was published last month, which suggested that for each 10 billion euros of annual venture capital investments, we could expect between 20 to 40 IPOs on the market. And as you know, there's something like 60 billion euros of VC investments in Europe over the last 2 years, and that number grows daily. And that provides the basis of well over 100 European IPOs. This research also said the fact we didn't have a single European market caused a huge gap in potential European GDP growth because companies were too dependent on short-term finance or banks. And that gap could be up to 50 billion euros of GDP sacrifice each year. And the survey also said we could actually, we attracted all the companies which were suited for IPOs, we could triple the size of our market. So we've got an interest in doing this, but clearly there's a far wider interest, which is for the good of Europe, for Europe's economy. I think the potential is enormous. There are thousands of companies all over the world that would benefit from an AIM quotation, especially when countries like the US have shot themselves in the foot with Sarbanes-Oxley. So if I go to somewhere like India, I can get rid of 3 boxes of business cards in 5 minutes. And that's a world record, I assure you. And there's so many companies, but obviously we need to control the growth of AIM to maintain its quality. And it won't be easy, but we recognise we have to make sure that we keep the quality up and we make sure our key project at the moment is to make sure AIM becomes a solution for Europe. AIM's 10-year track record, the institutional investor base and the international appeal give us a unique foundation, I think, to develop a pan-European market. And we think AIM's destiny is to provide Europe with its growth market. And that's building on very solid foundations, a huge foundation with huge critical mass and momentum. So AIM has to become a European market for Europe's investors and Europe's companies. So we have to provide the supporting infrastructure in Europe in terms of nomads that support the market, other advisors, companies, investors. And that's what we're going to be busy doing over the next 5 to 10 years. No matter how long it takes, we're going to do it. So we're now engaged in quite extensive discussions with investors, advisors and intermediaries to try and recreate in Europe the unique community that makes AIM so successful in London. And we're increasingly getting people who are becoming nominated advisors in Europe who will give us the pipeline of companies. And we're talking to local member firms who will provide liquidity and ongoing research, which is important to keep interest up in companies, and also distribution to local investors. So that should try and help foster the entrepreneurial culture in Europe with all the benefits that gives to economic growth. So I think AIM is quite a compelling case, and AIM's model has won over its critics. Nobody in the financial press in the UK criticises AIM at the moment. I was told most recently by the guy that covers small companies in the FT that I was mad when I predicted AIM would get to 1,000 companies before its 10th anniversary. It got to 1,200 companies. So we continue to beat the pundits, but they've all come round to our way. AIM is an obvious solution to the financing problem that smaller growing companies have. And we're going to make sure that the benefits of those across the whole of Europe. That's very good time because I was just coming to the end. Only then will, I think, European companies be able to compete efficiently and effectively on the world stage because they have to. And the dream of creating an open and forward-looking European economy can really be achieved, and AIM is going to play a central role in that. So thank you for your attention. This is a really crucial subject. I'm sure AIM can help you guys achieve a lot of your aspirations. So thanks for listening today. I'm going to be around later on to answer any questions, but you've got to move on to the next panel. Thanks.